Hello there, this is Daily Wrap-Up. I'm Edison Yantaran for a Money Move. Stock markets are subdued today as the war in Ukraine continues. Allegations of deliberate attacks on Ukrainian civilians by Russian forces have been made. As a result, there is talk that Western governments might impose additional sanctions on Russia as punishment. European stock markets are trading in a small range as the prospect of a fresh wave of sanctions is flickering away in the background. The DAX and the CAC and the FTSE 100 are all showing modest gains. In the past week, the major European indexes drifted lower due to the renewed tension surrounding the Ukraine-Russia war, but they have all gained significant ground since mid-March, so the overall sentiment has improved greatly in the past 3 weeks. A strong rally in tech stocks is propping up the Nasdaq. The index is up over 1%. In turn, the S&P 500 is also up on the session. Elon Musk acquired a 9% stake in Twitter, selling shares in social media group Sari by 24%. Worries about additional sanctions being introduced is having the largest impact on the euro, as the single currency is down versus all other major currencies. Euro-US dollar dropped below the 1.1 mark, its lowest level in almost 1 week. The euro is under pressure from both sides, as not only is the Eurozone potentially going to feel the fallout from the extra sanctions, but the firmer greenback is weighing in the currency too. Last Friday, the US revealed a strong jobs report, so it is obvious the Federal Reserve are going to continue down the route of monetary tightening. Speculation of the 50 basis points hike from the Fed next month is still in circulation. The Bank of England hiked interest rates 3 times in recent months, but BOE Deputy Head John Cunliffe said that further monetary tightening might be necessary. High levels of inflation pose a threat to economies as it eats away that saving, and even though central bankers are burying their heads in the sand for too long, they now seem eager to tackle the rise in the cost of living. Gold has pulled back some of the losses it incurred. Last week, President Biden announced that more sanctions should be imposed on Russia, and that is helping the assets. Industrial metals like silver and palladium are higher too due to supply fears. Russia is a large producer of the metals, and it is possible that supply will be impacted on the account of sanctions. WTI and Brent crude are up over 3% following from last week's declines. The shatter of new sanctions against Russia has promoted traders to snap up oil, as any future punitive action against Russia could target its vast energy reserves.